current market. So before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by OptionsPlay or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So our agenda for today, we will be starting off with the major indices, highlighting some key levels, and we are seeing some consolidation at current areas, but price remains below a key support level for both the S&P 500 and the NASDAQ 100. There's a bit of bullish movement here in pre-market, but overall, a lot of consolidation. There's not much to make out of the price action over the last week or so for the major indices. From there, moving on to fixed income and commodities, we are seeing a lot of volatility here in fixed income, where we saw this, a big reversal, lower in yields, and then a strong rebound over the last few days. Bonds continue to decline and do remain on the back foot, which is something we'll be going over as well. On the commodity side, we are seeing soaring commodity prices here, and that is also putting a lot of downward pressure on equities as a whole. We'll be taking a look at the sector rotational model, looking at what sectors are providing leadership and what sectors are ultimately, dragging the major indices lower. We have two subsectors of interest for you today, and we'll end today's session with some bullish and some bearish market observations. So starting off with the S&P 500, if we take a look at the recent price action, there was this huge bounce here from roughly 2 weeks ago, on Thursday, I think. And, I had my concerns about this being a market bottom. I explained this briefly last week during the rapid fire session, but basically I didn't see that there was a fundamental catalyst behind such a big move. And even though, yes, it's encouraging to see price breaking above that 428 support level 2 weeks ago, there wasn't something right about this move, no fundamental catalyst in play. And at that time, the situation was only getting worse. So this loss of momentum, it wasn't really surprising. Overall, price is on a strong bearish trend here, as you can see with the S&P 500. And this week, price did break below that 428 level, came back to retest it 2 days ago, failed on a retest, but already set to open higher and above this 428 support level. That being said, I still view this as a very consolidation phase here, and my bias is definitely a bit more to the bearish side. And that's simply because there hasn't been many positive development between Russia and Ukraine. And I think that'll continue to weigh in on markets along with the higher energy and commodity prices here. So while this is definitely encouraging, a little gap higher above the 428 level, it doesn't break the bearish structure. And I think it's only a temporary minor bounce before a continuation lower here for the S&P 500. That being said, price action here is very much news and headline driven. So if we hear some positive news out of the conflict, we may see a huge rebound, and that would invalidate my bearish thesis here on the S&P 500. And moving on to the NASDAQ 100. So again, very similar price action, but even after this pre-market move here, you can see price is still below the 341 key level. Obviously, that just speaks to the fact that growth is being hit harder than value at the moment, and the NASDAQ 100 does have a higher exposure to growth stocks. So it is expected to be underperforming the S&P 500, and it has underperformed the S&P 500 for the last few months. In terms of downside targets, even after today's pop-up higher, we may see a bit of a retest at a 341 level and possibly even a break above that to 350. But overall, like the S&P 500, my bias remains to the downside for the NASDAQ 100, and possible support areas really are between this 320 and this 315, 316 level. As we can see here, even if we take a look at the weekly time frame, momentum has shifted into negative territory, and on the daily time frame, momentum has been quite negative now for a while, the last couple of months. And small caps, taking a look at the IWM Russell 2000 ETF. And again, like the S&P 500, like the NASDAQ, set to open higher this morning. But again, like the NASDAQ 100, still below a very major resistance level. And if we take a look at the weekly time frame, this is a Fib retracement chart from the pandemic lows all the way to all-time highs, just below 250. And if we take a look at the overall price action here, we can see price found a strong area of support by this 209, 210 level, which corresponds almost exactly to the 23.6 Fibonacci retracement level. And since then, there has been a break below that area, and price actually retraced all the way back to the 38.2 Fib level exactly, which is at the 188 level, as we can see here on the daily time frame. And overall, yes, there has been a bounce above that level, and price has managed to stay above 188, but there isn't a lot of momentum behind this move, and there's not a lot to go on for a move back above this 210 or 206, 207 to 210 area here. So ultimately, my view is still bearish here, but the fact that price has popped up, we may see another retest of 207 or so like we have in the past before another move lower back to this 188 support, what's turning out to be a fairly major support level. So looking at the VIX, and we are seeing that break below that 30 level that I've spoken a lot about in the past. So we are seeing that break below the 30 level for the VIX, which is definitely encouraging. But again, there hasn't really been any major positive news regarding the geopolitical landscape. So I wouldn't get too excited yet. And a move lower for the VIX would definitely mean less systemic risk and even less correlation and a lot much easier trading conditions. But again, in my opinion, the VIX would need to stay well below 30 for a number of days to confirm that view. And you really have to look at the headlines, really have to look at what's the geopolitical focus here, what's happening to develop your view, because just because the VIX broke below the 30 level, it doesn't mean it's going to stay below the 30 level for a long time. And you just have to ask yourself, what has actually changed for me to have a change in my view? So overall, definitely encouraging for the VIX to break below 30, but I'd like to see it move lower, and I'd like to see it below the 30 level for a longer period of time. All right, moving on to yields, and we can see here a lot of movement in the last few days. So we saw yields, obviously ever since they were at 137, there was a very strong rally all the way to 205 basis points. And since then, a bit of a reversal, a lot of bearish movement here for yields in the last couple of weeks, all the way back to this 170 basis point range where it is finding support, where it is finding somewhat of a base. And I think from here, we have seen that strong bounce all the way back to above 200 basis points. And the short-term target is pretty much in sight for today at around 205 basis points. And from there, if we take a look at the weekly, there's no real short-term obvious area of resistance, if we can call it that, for yields. So I do think should yields break above that 205 basis point range, we're in fairly almost unknown territory in terms of the next resistance area. But again, with yields rebounding the way that they are, you may finally see some support for financials that have been taking a bit of a beating in the last few days or weeks. And that leads us to TLT, the bond ETF. So, I've been quite bearish on TLT for a long time here. And 134 was definitely a bit of a longer term bearish target here. But now that area is actually starting to break, that area of support is starting to break. And we can see here price is actually set to open slightly lower this morning at just higher than 134. But as we can see here, this is a major support level, and momentum does point to a further decline here for the TLT bond ETF. And the next downside target I would have for that is 130 here over the next week or two, unless, again, there's a massive fundamental shift or macro shifts in play. I can't see a rebound here for the bond ETF, especially with yields, finding the momentum that they have in the last few days. And taking a look at gold, I mean, what a chart we have here, because we can see here, it was only a few months ago that we were talking about this 171 area being a major area of resistance. And ever since price broke above that area a few weeks ago and broke above its descending trend line, we have seen so much momentum to the upside here for gold. Ever since it broke above that trend line, it came back to retest a perfect intraday bounce and a strong move higher. Price initially ran into resistance at around 180, 182. Sharp move lower, but that that didn't last for too long. And a few days later, price broke above that level and managed to, within a few days, reach that 190 to 193 area, which if we take a look at the weekly time frame, major resistance level, all-time highs, all-time high territory. And from here, it's looking to be a very tempting double top formation, right? We have the strong move higher, a bit of resistance, consolidation phase almost, and this very strong move higher. But again, running into a lot of resistance here at just below 195, a major rejection on the weekly time frame. And even with price set to open lower today, this candle will most likely end as a red one. So very tempting double top formation. And that does point, from a technical perspective at least, to more downside. That being said, we have to take a look at what is driving price for gold higher. And that's because it is a safe haven asset, and has the fundamentals or the macro outlook changed to warrant a move lower? In my opinion, not that much. So I think a bit more patience is required. But what we can confirm is this 191 being a very, very strong resistance level here. We may even see some more consolidation in this area rather than a reversal lower, because I can't see investors rotating out of safe havens that quickly with what is going on in the world right now. And taking a look at crude oil. So, it's definitely showing a decent pullback after spiking to the 130 area in the last couple of days, but it is bouncing higher from its 21-day exponential moving average. And right now, price is definitely very headline driven. And news about any news about potential for supply increases could see a huge reversal lower. And we are starting to see some headlines about potential supply additions from Venezuela, Iran, the UAE, and that is causing a lot of volatility, as we can see here over the last few days. So, I do think price is definitely overbought, but it's hard to really be bullish or bearish on oil at current levels where there's just so much uncertainty in play, in my opinion. So definitely want to keep an eye on, but you have to remember it is very headline focused. And moving on to sector rotation. So a lot of interesting sector rotation happening here in the last few days, especially with energy. We can see here providing strong leadership on higher oil prices, of course. And we also have utilities and healthcare in the leading category that are traditionally defensive sectors, providing that defensive leadership, which again is no surprise considering what's happening in the world right now. And we do have staples though rotating out of the leading category and into the weakening category. I don't think it's a big rotation out, even though it is a defensive sector, and I do expect this to eventually rotate back into the leading category over the next few days or even weeks. Taking a look at the lagging category though, we have technology, we have discretionary, and we have financials. Now these are three major sectors especially for the S&P 500, where the companies in those sectors carry a lot of weighting, and they are essentially dragging the overall sector, overall index lower and lower here, despite the fact that there's so many sectors on a relative basis performing a lot better than the S&P 500. So moving on to some sectors here that I have for you. And the first one I wanted to take a look at was materials. So if we take a look at the chart previously, materials was in the leading category. It actually moved back into the weakening category for a while and is now showing signs of at least some short-term bounces in relative momentum and relative strength here against the overall market. And taking a look at the chart itself, it's still maintaining above that 78, 50, 79 area here, as we can see on the weekly time frame. Multiple bounces from that area, even in the last few weeks. And that is encouraging, the fact that price is above that area. I would like to see more momentum from these bounces to, to facilitate an upside move here. But for now, price is almost being squeezed, in my opinion. We are seeing that, but we are seeing price being squeezed to the 78, 79 area of support, but it is maintaining above this area. And I do think that provides some evidence of a potential move higher back to maybe 86 or so. I would like to see price maybe break about a 21-day exponential moving average first. But overall, a fairly positive outlook here for the materials sector. And taking a look at energy, and a lot of people have asked for XLE, the energy sector ETF, and XLE is basically a proxy for oil, as the highest rated companies within the sector are all oil companies. And if we take a look at the price action, ever since price found support here at this 52 level, there has been a very, very strong move higher. And obviously now with supply restrictions, supply problems here for oil, we can see that has just exacerbated this move even more, all the way to this 80 area where it did run into resistance. Now, if we take a look at the weekly time frame, we can see here XLE is at its highest that it's been since for a few years now, and it is now at a major resistance level just below 80, and already rejecting it as of yesterday, and set to open a little bit lower today. And we know right now that XLE is very much headline driven, and we know there's a lot of volatility in the space right now. But my view currently is definitely one of caution, because while there definitely is potential for price to break above this major resistance area, from a risk to reward perspective, it's definitely not optimal. Price is, looking a little bit overbought. So much volatility and so much uncertainty. It's difficult to really warrant a bullish bet at current levels for XLE. But at the end of the day, the last thing that you want to do is lose sleep by making a big bet on a sector or a subsector that is heavily overbought, and it's very just sensitive and unpredictable and to the volatile geopolitical situation here. So I know a lot of people were asking for XLE and my view on it. I just hope this kind of cleared it up, that just from a risk to reward perspective, I do view it as a little bit overbought, and I do view it as a higher risk trade. So moving on to some subsectors that I have for you today. And the first one I have is the solar ETF, TAN. And I'm very surprised by the price action here, because when you think about solar, you automatically think about growth stocks, right? And obviously in current conditions, that's a big no-no. But alternative energy is now finding support. And for those that are looking into this, I think the TAN solar ETF provides a very good broad-based exposure towards this subsector. And take a look at the price action itself. Price found support at this 56 level, bounced higher with good momentum, broke above that 67, 68 area of minor resistance, broke above its exponential moving averages as well, had a nice healthy pullback to this area, an intraday bounce, and already a strong move higher, and looking very bullish in the short term despite yesterday's red candle. And I do think this points to further upside here for this ETF. Potential targets, if we take a look at the weekly time frame, I really want to highlight the 87 area maybe as a potential short to medium term target for the solar ETF. And should price break above that level, we're looking at around 100 or so, but I'm not sure, that's definitely I'm not sure if price would actually reach that high, but for the short term to medium term, 87 does look like a good initial target here, in my opinion, especially with daily momentum going positive and weekly momentum improving at a very quick rate. And taking a look at KRE, the regional banking ETF. So we can see here, price has been fairly neutral over the last few months, almost a potential head and shoulders pattern was looking like, but price is finding support at this between the 68 and 66 area, as we can see here. And more recently is bouncing higher. It's set to open a good bit higher this morning. And that is encouraging for continuation higher here for KRE, especially when rates are finding support and are moving higher at a very quick pace. There's a lot of momentum behind that move. And I think KRE will definitely benefit from that, especially after finding support at 68 very recently. and with it opening higher this morning. Okay, so moving on to some bullish market observations. First, I have for you is FreeportMcMoran, which part of the materials sector, which we did highlight earlier. But taking a look at the price action here, and obviously this company is very highly exposed to copper prices, but definitely one of the best in class, if not the best in class, copper companies out there. And if we take a look at the more recent price action, we can see price did run into resistance at 45. There were multiple rejections from this area, and more recently there was a more recent rejection. Price did pull back to an area between its 21 and 55-day exponential moving averages, and from there found a lot of support, a lot of momentum to break above that 45 area, reached 50, and did run into some resistance there, pulled back to the previous resistance turn support, and is moving higher already. So from I would consider this a very short duration trade, but I do think there's potential there's potential for more upside, with the short-term target being at 50. And from there, you're looking at a new higher high or new all-time high here for FreeportMcMoran. And taking a look at AMD. So for those of you that joined in for last week's rapid fire session, you know I'm a big fan of AMD. I think it has great growth potential. Its fundamentals look good. And from a technical perspective, I did highlight that, for AMD to be a bullish bet, I think it would have to be a medium to a longer term kind of play. You're looking at a core diagonal setup possibly. But if we take a look at AMD and the major levels, I highlighted this 100 level as a major support area. And once again, earlier this week, price did find support, intraday bounce on that level, and is already set to open higher today. So, I do think from an entry point of view, this is already a much better risk to reward compared to, where I was originally looking at AMD as a possible bullish setup at around 120 or so. I do think the fact that it's moved closer to this area of support definitely gives a lot more encouragement for a better risk to reward bullish entry. But for those of you that are more conservative and maybe want to wait a little bit, I would say if we take a look at this bearish trend line, maybe wait for a break above this trend line, a bit of a retest up that level, and continuation higher for that entry point at the bottom of the retest. But again, that's for those of you that are more conservative and you want to wait for more confirmation or more bullish confirmation. Taking a look at Crown Castle, part of the real estate sector, which is recently finding some momentum relative to the S&P 500. And we can see here, price did bounce higher from 156, and it actually broke above this 170 support area, reached its 55-day exponential moving average, ran into some resistance, pulled back lower, but already yesterday did bounce higher with some good momentum there. And I think that does provide evidence of a continuation of this rally to the short-term target that I would have to at least 184. And, should that area break, I'd be looking at around maybe this 189, 190 area as the next target here for Crown Castle. And taking a look at some bearish market observations, first I have is Dexcom. And Dexcom, it is part of the part of the healthcare sector, but definitely also very much technology company. And if we take a look at the price action on the daily time frame, you can see here ever since price reached 660, there's been this very strong move lower. And the more recent key level that I'd like to look at would be around this 440, 445 area, where price, is running into resistance there on multiple occasions. As we can see here, it's definitely a bit of a consolidation phase happening currently, but multiple rejections of 440, 445, and even recently this week, reached 440, strong bearish candle, and breaking below its 21-day exponential moving average. Definitely lack of momentum for an upside break. And I think there's actually more downside, because if we take a look at the weekly time frame, we can see here, the price did break below that 440 level, came back to retest it as shown on the daily time frame on multiple occasions. Strong bearish candle forming this week. And from a risk reward perspective, I like Dexcom here as a bearish play with a medium to longer term target at around $380. 10 or so, which is a major support level, as we can see here on the weekly time frame in the past. Taking a look at Zscaler. So Zscaler, strong bearish trend, broke below this 220 area of support, coming back to, retested. I think there's potential for maybe price to pop up a little bit higher, but overall, not a lot of momentum behind this move. And I think, should price pop up a little bit higher, that provides a much better risk to reward bearish entry point. I'd be looking for a target at around 165, as we can see on the weekly time frame. It is a major area of support. So good downside potential here for Zscaler. Momentum just turning negative on the weekly time frame and has been negative for quite some time on the daily time frame. And finally, taking a look at Comcast, part of the communication sector, which I have been quite bearish on for quite a while. Strong bearish trend. And we can see here the price did break below that 48 level, and has very recently formed a new swing, a swing high there at around 47, a new lower high at 47, I should say. Multiple rejections of its 21-day exponential moving average and a big move lower yesterday. In terms of targets, I'll be looking at the 42 area here of support as the weekly targets for the next couple of weeks or so. And with that, that is all I have for you today. Thank you so much for joining me, and I hope you have a great weekend. Goodbye.